Okay. I hope you guys are having an amazing day. We are having some technical difficulties, but that's the nature of technology these days. It's a blessing and a curse at times. When it works, it's awesome. When it doesn't, you get a little frustrated. But I'm glad we're here. Today, we're going to be talking about this concept of an annual company meeting. Now, let's be brutally honest. Most business owners out there, they either fake their annual meeting or they try to backdate something well after the fact, after someone reminds them, oh, by the way, did you have an annual meeting last year? And what I want to make sure that we get you into the routine of doing is being hyper compliant. Because the reality is there are many enemies at the gate. A lot of individuals that want to take a piece of your pie, the creditors, the litigants, the opportunists, right? You're the one working really hard to create what you have, but if you're not doing and engaging in the formalities of business, you're essentially one lawsuit away from potentially losing it all. So my goal and objective is to talk with you about this concept of an annual company meeting. And the reality is you could spend a lot of your time, effort, and energy just trying to figure it out on your own, but why not just tune in, sit back, work with me over the time that we're going to spend together today and get your company meeting in force, right? To actually have it happen so that you can rely on the fact that it's done, right? Now, it doesn't have to be perfect. Done is way better than perfect, my friends. Done is way better than perfect because the reality is so few actually do it that the process that you can get engaged in and regularly take part in can get you the outcome that you desire. Now, here's the thing. This is going to be a bit messy, right? Because I'm going to talk with you about the concepts of structuring a company meeting, what needs to happen in a company meeting. I'm going to show you a template. And in fact, if you stick around to the end, I'm going to give you an opportunity to download your own template so that you can start doing this. Now, there's a few things that I need to make sure that you take home today, right? The goal and objective is this is not for you to simply just be passive in this endeavor. I want you to actually implement what we're talking about in real time so that by the time we are through, you actually have your own company meeting finalized, right? And all you need to do now is formalize that in a document called the minutes, if you will. The minutes, if you will, of your company meeting. Now, if you're a corporation, a C corporation, an S corporation, you are required by law through the statutes to actually engage in a company meeting on at least an annual basis. Now, if you're a limited liability company, an LLC, a sole proprietor, there is no such requirement in the statutes that you have an annual meeting of your company. But what I can say is this. Through actual court proceedings, many judges have looked at things that have transpired in LLCs and sole proprietorships and have weighed heavily against the owner the fact that they do not engage in the formalities of business, right? So even though statutorily speaking, if you're an LLC, you may not be held to the fire, if you will, of actually holding a company meeting in order to maintain your LLC. If you are engaged in a litigation event and have to go before a judge, there is a strong likelihood that that judge will defer to the realities that exist for corporations, right? So they're going to hold you to a standard, even though statutorily speaking, you're not required to be held to, when they're evaluating whether or not you should maintain these liability protections, especially when we're talking about LLCs, limited liability companies, in order to maintain and keep in force those liability, the force field, if you will, around your business. Many judges are going to look to see, are you engaging in the formalities, right? The formalities of business. And really the context that they look toward is they look towards the corporation ecosystem because that is so, historically speaking, old, well tested in the court ecosystem, that they look to that sort of as precedent of sorts, right? And again, even though it's not exact precedent, it sort of gives hints as to what should be taking place if you're taking your business seriously. So my goal and objective is for you to understand that while statutorily speaking, you may not have to do this. If you're interested in taking your life and your business to the next level, let's just do the things that we know give us more safeguards. Because at the end of the day, no matter what you're doing to keep more of every dollar you make, no matter what you're doing to multiply the dollars you have, no matter what you're doing to try to pass on those dollars with intention, if you are not protecting the wealth that you're working hard to build, you are severely impacting your ability to truly create generational wealth. And if you're part of our ecosystem, if you've been following the things that I share with the community at large, I believe the true measure of success is not what you make. It's what you protect, what you keep, what you grow, and what you pass on with intention. And protection, asset protection, is a key aspect of this pillar ecosystem, the 4 pillars of generational wealth creation. So we're going to focus today on this concept of the company meeting, an annual company meeting at the least. Now, there's no limit. You can have multiple meetings throughout the year. It doesn't have to be one time a year. But I'm going to be talking about it within the context of an annual company meeting. If you're following along with me during this presentation, that will be very, very helpful. It'll be an opportunity for us to make sure that we're getting progress. If you're watching this live and you jump into the comment section, please feel welcome to drop points. Let me know where you're coming in from, where you're tuning in from. I get a lot of positive reinforcement, especially if I hit home on a point that you say, wow, this really knocked it out of the park. If you drop the word Uplevel, I'll get excited about that. It'll make me feel really good, which keeps me interested in being able to share this type of content with you guys. Now, if this is the first time we're meeting, my name is Edward Collins. I'm a lawyer. I specialize in tax, estate, and business law. I'm also a serial entrepreneur. I've built and scaled multiple companies of my own that I still own today, taking each one of them up to and through 6, 7, and even 8 figures now. An entire 8-figure enterprise, plus our real estate portfolio, residential and commercial real estate. I'm saying all of this not to be braggadocious. I'm sharing it with you so that you know that I'm academically trained in the languages of business and money. And I have real-world practical experience putting that knowledge to work in this ecosystem that we play in, right? So I have multiple objectives today. Part and parcel to you getting amazing outcome is to follow along and be participatory along the way. So that being said, if you are watching me on your laptop or desktop computer, make sure you open up another either Google Doc or Word doc so you can start to take some notes. If you're not going to do that, if you have something to write on, a pad, pencil or pen to write down with, that would be very helpful, because when you go back to create your company minutes of your annual meeting, having all this information readily available will make that process so much easier. And again, if you stick around to the end, I'll share with you a link that you could download a document that will help facilitate this on your behalf. Now, I do want to address a point that came up recently. I was talking with another business owner, and they were talking about Edward. They said, why should I waste my time jumping into this session with you? I could just go ahead and download something and put it into practice in a week or two or a month or two or whatever it may be. And my retort to that business owner and to you is, realistically speaking, how many things have you downloaded over the course of your business career and did nothing with it, right? Never got around to it. Maybe it's lost in a downloads folder on your laptop. Maybe it's in some sort of random email that you email to yourself. The reality is we do that often, right? Being part of this ecosystem, I want to make sure that I'm helping to elevate not just financial literacy, but the implementation of that knowledge so that you get outcome, right? Information is great. Like, it leads to education. But if you're here, if you're part of this ecosystem that is Uplevel, and you've been following me at all, you know that I personally, because if you're anything like me, I personally like education, but I much prefer transformation. And the only way to get transformation is to take action. Action steps are required to get outcome. Now, what is the significance, if you will, of the company meeting? Well, from a formalities of business standpoint, the company meeting is sort of your announcement to the world that you are actually taking your business seriously. You're doing the things that real businesses do to document the thought processes that they engage in, to safeguard the step-by-steps that they take in a historical context so that they can look back on it, they can rely upon it as sort of like a guarantee that certain types of activities can take place. They can make sure other team members get access to this type of information so that they can start taking action themselves. They can engage in things like resolutions and follow through on those resolutions. There's so much that happens in the context of a company meeting that makes it possible for the outside observer looking in to say, hey, listen, these individuals, this owner, if you will, or this set of owners, they take their business seriously. And as such, we have to acknowledge that they are a real business. Why is that critically important? Because if you're not a real business and a court deems that you're not a real business, well, then you have the potential where liabilities of your business enterprise bleed into your own personal life, right? Bleed into your own personal life. So you see, when you think about the context of asset protection, right? You have a few ways that asset protection takes place, right? So if you're a business owner and you're engaging in this concept of trying to protect your wealth, you have to recognize that there are two different types of liability. The first type of liability is what I call inside out liability. This is when a risk event happens inside of the business and the harmed party tries to reach through the business to get to your personal stuff like your home, your bank accounts, your portfolio, right? That process of inside out liability protection is critical. Now, there's another type of liability protection, which we're not going to talk about today. That's outside in liability protection. Inside out liability protection is sort of the force field, right? The force field concept. When you're thinking about your business, are you putting a force field around it so that these potential harmed parties, like a slip and fall in your business, someone who purchased a product from you that was harmed by the product, or the product didn't meet its obligations under an agreement, whatever it may be, right? There's a risk event that occurs in the business. Maybe it's an employee that gets hurt on the job, right? You want to make sure that plaintiff, that potential plaintiff, does not have the capability of reaching through the business to get to your personal stuff, right? And the way we do that in the traditional context is that we put like this force field around our business. This force field concept is one that essentially says, okay, I'm going to put some form of limited liability protections around the business so that harmed party can no longer reach through it, right? And in the context of the vast majority of businesses in the United States, that force field comes in the form of a limited liability company, an LLC. Now, there are corporations, obviously C corporations, that can be put in play that have also limited liability structure into them. But the limited liability company is one that the vast majority of businesses that implement some form of liability protection, they take that path. They take the path of establishing an LLC, and they believe that simply because you have an LLC, a piece of paper, that you have the protection. And that's just not true. An LLC does not give you limited liabilities. Now, I know that I'm going to get a lot of other maybe legal professionals in here that would say, Edward, what are you talking about? That's not true. But listen to what I'm about to say. It's not the LLC that gives you the limited liability. It is what you do with the LLC. It's how you operate the LLC. It's the formalities of business in which you engage that actually give you that limited liability protection, right? So when we're thinking about what are the things that you would need to do in order to get that limited liability protection, you have to engage in the formalities of business. So what are the formalities of business? Well, there's some regular ones that are pretty commonplace, right? People with any type of common sense, even though I know that common sense is not always common practice, anyone with common sense knows that, for instance, commingling your personal money with your business money will essentially bleed through and absolve you of the protections that you have, meaning they essentially erode this liability protection because now in a court, there's very little separation between you as an individual and you as a company, right? So commingling of money is problematic. But what we're going to talk about today is this concept of the formalities of business within the context of actually formalizing business decisions in the context of a corporate or company type meeting context. And the company meeting is one that gives you the flow, if you will, of formalizing, documenting, if you will, the decisions that are being made for a business on a regular basis. Now, the annual company meeting is something that you have to do at least once a year if you're a corporation. And I suggest strongly that regardless of whether you're a corporation or not, every company should be doing it. Because at the very least, it showcases to a court that you take your business so seriously and that you want to encourage the court to do the same, that it's a legitimate business, separate from you, engaged in the formalities that make it separate from you. And having this annual meeting is one such formality. So what does it look like? Within the context of a company meeting, there are a few different things that need to take place. The first thing we need to do is we need to understand that if you are a company, you should have another document that forecasts and tells to the world, forecasts to you and the members, and broadcasts, if you will, to the world, what you do and what the rules are for what you do within the context of the company. And that document is something called an operating agreement, if you're a limited liability company, or your bylaws, if you are a corporation. So an operating agreement, if you are a limited liability company, or bylaws, if you are a corporation. Both of those documents essentially do the same thing. They broadcast to the world what it is and how your company operates. What are the systems by which it follows? What are the procedures by which it guides itself, so that the world is on notice. If anyone ever got a copy of your operating agreement or was handed a copy of your operating agreement, they would know exactly how your company operates, right? If they got a copy of your bylaws, they would know exactly who is allowed to, for instance, own shares in your company. They would know exactly how officers get elected in your company. If they get a copy of your bylaws, they would know exactly what the procedures are with regard to having a capital account distributed to the members who originally contribute capital into the business. All of these things are important because if you ever get sued, these are the sorts of things that a plaintiff's attorney is going to start to look to in order to figure out where are the gaps, where are the opportunities for them to sort of like wiggle in and start creating pressure to either get you to settle at a number that is way higher than you would really like to, or if necessary, press it through the litigation process and be achieving different milestones of success within the court ecosystem. Now, the reason I'm talking about the operating agreement or bylaws is because within the context of that document, there should be stipulations with regard to your company meetings, right? Specific stipulations are in the context of notice requirements, and quorum. So notice is the amount of time you have to let the owners of the company know in advance of a company meeting that a company meeting is going to take place, right? So that's a notice requirement. The same thing in the bylaws environment, notifying shareholders that a shareholders meeting is going to take place, right? So these are notice requirements. You're telling those individuals who are owners of the company that a meeting is taking place, and you're telling them in advance of that meeting so that they can be present and vote on things that need to be voted on at the company level. Quorum is another concept which stipulates what percentage, if you will, of the owners must be present in order to make decisions on behalf of the company in a formal way, right? To vote on things, right? What is the quorum? What is the percentage, if you will, of those individual owners that have voting rights? What is the percentage that have to be present at the meeting in order for the decisions to be voted upon, like matters of the company to be voted upon? So your bylaws or your operating agreement are the documents which tell you what rules you have to follow, like how many days in advance an owner notified that a meeting is going to take place? Now you may say, well, Edward, what if I own my own company, but I'm the only owner? Well, you should still have a notice requirement because you should still have an operating agreement or bylaws, right? You should still have a governing document with regard to your operations because that is an aspect of the formality of business, right? You have an official document which governs how your company operates. And if every document should have some sort of notice requirement that's put in there, and therefore you should notify yourself. And then you say, well, Edward, how do I do that? Well, it's pretty simple. You just actually notify. You create a memo and you share it with yourself. You sign it. It's dated and signed, and it becomes part of your company records that this took place. Now, I'm going to address how to do it in the absence of such notification because I'm a realist, so I know that not everything goes to plan and not all I's get dotted and all T's get crossed when it comes to business operations. So I'm going to talk with you about how we can deal with a lack of notice for certain circumstances, because that definitely does happen from time to time. When it comes to quorum, it's really hard to deal with that because that is a stipulation of the number of individuals that need to be present. But again, if you are a sole business owner, meaning no other owners of the company, it's just you, quorum is you, right? So if you're present at the meeting, you will have the ability to vote on it and make decisions on behalf of the company. Now, the annual meeting itself, because now we're going to start talking about how do we actually conduct the meeting. We need to understand that the meeting goes through a variety of different aspects of what needs to take place, right? The first is we have to call the meeting sort of to order, right? We have to make sure that individuals who are present are essentially notified that the meeting has started, right? So we go through this process of calling the meeting to order. So call to order. Call to order. You gotta love my handwriting, right? So we call that meeting to order. And then when we're in that context, we need to make sure that everyone who is present has been notified, right? Meaning we're making note, was notification, did it take place? And we're making note that this concept of quorum has been met, right? So we're essentially writing down, taking minutes as we're going through this, that we're calling the meeting to order, we're recognizing the date and the time and all of the people present, right? Who was present, who was absent, right? So if we have individuals that were part of the ownership structure that were not there, you need to indicate that in the minutes of that particular meeting, right? So you're going to go through that process. So you're going to go through a verification process. Verification. So verification, again, is this process where you're essentially saying who was present, were they, did they engage in quorum, where there are enough individuals there to make decisions on behalf of the company, and were they properly notified so that they could be present, right? Then you're going to make sure that you go through this process of dealing with stuff that has already happened in the past. The first thing that happened in the past would be the last meeting, and you're going to recognize the last meeting minutes. And what that means, gotta love this, last meeting minutes. And what that means essentially is you're trying to go through this process of letting the world know that something has taken place in the prior environment, and we're acknowledging that. We're going to accept those meeting minutes as presented, or if there was a mistake in those meeting minutes, we're going to acknowledge that mistake, and we're going to talk about it right during this particular meeting. And if there needs to be an amendment to those minutes, that amendment gets made during the meeting. We then want to go through this process of dealing with any type of official reports that are part and parcel to the business, right? So official reports. This could include things like financial reports for the business, like your profit and loss statement, your balance sheets, right? So official reports. And maybe you have different members of the team that are handling the development of those reports. You're going to go through this process of having those official reports presented during the meeting. You're going to go through the process of making sure that you address key points in that particular, in each particular report, whether it's an operations report, maybe it's a staffing related report. It could be a tax or a compliance related report, like talking about what has happened in the prior reporting period from a tax perspective. It could be about tax strategies that were implemented, right? And again, you shouldn't wait until the end of the year to be dealing with tax strategies. This should be an ongoing process. But if you're having frequent company meetings, this would be something that becomes pretty routine, right? Like looking back at the prior quarter as an example, and indicating which tax strategies have been implemented and possibly what the ramifications of those strategies were, meaning how much tax savings were acquired by implementing a particular strategy. Now, I'm curious, in the comments, again, if you're watching this live, drop it today. If you're watching this on replay, in the comment section, if you wouldn't mind, I'm curious, how often do you engage in tax strategy types of discussions, either with yourself, with other members of your company, and most importantly, with outside professionals that are helping you, maybe your accountant, your CPA, your other tax strategists? How often do you do that? Is that once a year? Is it once a quarter? Is it once a month? What's your cadence for engaging in that type of discussion? And the reason I bring that up is I can't tell you the number of times that I get called into situations with business owners, and we start talking about the tax strategy end of the spectrum, and they've never had a discussion like it, right? They talk about the compliance aspect of it, right? Like filing the returns, getting the documents that are supportive of return preparation to the accountant, but they don't talk about strategy. And if it is talked about, it's usually them bringing it up. Right? They're the ones bringing up tax strategy, not the supposed professional in their life, right? And the challenge with that is that that's usually a very reactive and unfortunately often too late type of discussion, right? That gets brought up at year end, or worse yet, right before tax filing season of the new year, and the prior year is already expired, right? Tax strategy is about what to do proactively. And most accountants, unfortunately, are little more than glorified historians. They're spending all of their time, their effort, and their energy just trying to figure out how to best tell the IRS what already happened, right? And the reason I'm bringing it up here is because if you make it part of your routine, meaning a regular company meeting, to talk about these sorts of things, tax compliance matters, tax strategy matters, and you're evaluating official reports on those subjects, well, then you're setting yourself up for an opportunity to make sure that this stuff doesn't slip through the cracks, that you're not waiting until it's too late, right, to deal with it. You're positioning yourself to be much more proactive with regard to keeping more of every dollar you make. Right? That's a critical objective for any business owner, and really any individual for that matter, to be engaged in, right? We also need to recognize that as a company, in your last meeting, there could have been things that you discussed that you did not reach resolution on, and that needs to carry forward to another meeting. So this is when we get into the concept of old business, right? This is something that confused me a lot when I was first getting started in business, especially when I first started learning about the structure of a company meeting, this concept of old business. Well, if it's old business, why are we talking about it again? Well, it's not old business that you've concluded on. It's old business that was brought up in a prior meeting that just has not gotten resolution. It's not finished yet. It still needs to be addressed. It is carrying forward into this meeting, right? So old business could be things that maybe you were deciding upon, but a decision had not yet been made, and you were waiting for more information. Now maybe more information has come, and now you can discuss it in a more full matter. So you deal with the old business first. And then logically, after that's been concluded, then you move on to new business. New business is something that has not yet been brought to the forefront of a business meeting, right? It's not yet been made present and part of a particular meeting. So this is new stuff that is happening within the context of your business ecosystem. Now, in both sections, in the old business section and in the new business section, there could be things, action steps that need to take place based on the discussions that are had during the company meeting. And some of those action steps need to be formalized with regard to approval of the company. And that formal approval process is referred to as a resolution. A resolution. Resolution is the business's decision to say, yes, we're going to do X, Y, and or Z, right? So it is a formalized acknowledgement that the company agrees to engage in a certain type of activity, right? So a resolution does that for us. And we want to make sure that we're making note of particular resolutions that take place. The other thing that needs to happen within the context of a company meeting, at least on an annual basis, now this could be more frequent, but usually I only see this on the annual business meeting, is election processes. And the reason I'm saying it in this context is because pretty much every business entity needs to have someone who is authorized to engage in activity on behalf of the company. And in the context of what we teach at Uplevel, we want to create anonymity with regard to your ownership. Again, I didn't talk about the second form of from liability protections in general, liability concepts. That's the outside-in liability type of protection. But that is critically important. And anonymity is an aspect of that type of liability protection. It's not exactly asset protection, because just being anonymous to the world doesn't mean you're not liable for actions. But it sort of obfuscates your ownership. And if that's the case, if we're obfuscating your ownership, we may not want you to be acting publicly as the owner of the company. We may wish to have you acting publicly as an officer or a manager of the company, right? Not as the owner. Now, in many regards, it is safe to say that many would surmise that if you were acting, maybe you are acting in an ownership position. But if instead of owner at the end of your name, we put the title president or treasurer or vice president or managing manager, right? That at least broadcasts to the world that there could be someone else that's in the ownership role and you are not, right? So we utilize the election process to go through a formality of giving you that title within the context of the business, right? So if you want to have the title president, you don't simply just write the word president after your name, right? That's not formal, right? There should be a formal process that your company goes through in order to elect you to serve in that role. And in most contexts, that role is for a period of 1 year. Right. So if you're elected to an officer position, right? So even if you're not a corporation, your limited liability company, your operating agreement can stipulate that you will elect officers, and it goes through the process with regard to how you do that. You nominate the officer, you vote on that nomination, you elect the officer into that position for whatever period of time your operating agreement or your bylaws, if you're a corporation, would stipulate, right? But the election process should be formalized within the confines of your regular company meeting. Again, in the context of an election, maybe it's only happening during your annual meeting, because again, most of the time you're probably not going to elect an officer or a manager more times than once per year. But going through a formal process, that election process is critical to that step. We also want to make sure that we're taking advantage of any strategic directives, right? Directives. So directives of the company. So maybe this is not a formal resolution, but maybe it's a stipulation that the company is going to engage in certain type of internal operations. So as an example, you could say, we are going to direct our company to move in a pattern of developing KPIs for all of our salespeople. Right? So that's a directive. That's a strategic directive. The company had a meeting about it. The company formalizes that and is adopting a directive. That's not a resolution, right? Because it's internal, right? It's an aspect of what the company is going to do inside of itself, right? We're going to adopt a KPI process so that our sales team is going to be able to be held accountable to meeting certain key performance indicators, right? So that we can measure how well they are doing. and we can utilize those KPIs, those key performance indicators, for employee reviews, coaching opportunities to help members of our team to up-level themselves with regard to objectives that we're looking towards each of our team members to achieve, right? So directives, formalized directives, give us the context in which to do that. Again, we're formally documenting that process. And then any type of compliance-related matters, right? Compliance-related matters. Compliance typically is something that you are adhering to with regard to outside regulations, right? So regulations that are outside of your company. The key compliance initiative of most businesses is the tax compliance protocol, right? Did we file our tax returns? Did we file our quarterly estimates? Did we file our payroll taxes, right? Our 941 payroll tax reports. Like, did we file those compliance-related matters? Are we adhering with governmental requirements? Like, for instance, our annual company renewals with regard to the state. If your municipality requires you to renew your business locally, a lot of rental real estate businesses, for instance, definitely need to engage with their local municipality, because many municipalities require you to complete revenue metrics of some sort. They have you report on the revenue that your rental business is generating, your rental real estate is generating, and they use that a lot with regard to determining what local tax rates could potentially be. They look at that with regard to local initiatives on the utility front, right? Like dealing with like sewer costs and such. Like, they use that information in order to make local municipality oriented or based decisions. So maybe you have to comply with those local regulations. Same with regard to business licensing or rental licensing. Some communities require you to get certain types of licenses renewed each and every year in order to do short-term rentals, as an example, right? So again, the compliance initiative is sort of like your acknowledgement during the meeting that you are adhering to the compliance requirements of the company, and you are formalizing that in the statement that, yes, we did do this, yes, we did do that, so on and so forth, so that you're keeping a record that you are staying compliant. You're doing the things that a business, a real business, would engage in, the formalities of business, and you're just documenting that process. And then we need to make sure that if you open the meeting, you called it to order, you have to adjourn the meeting, right? You have to adjourn the meeting. And again, what time did it end, right? And there should be a difference between the time you started and the time you ended the meeting. Again, this is part of the process, and you're taking notes, if you will, while you're conducting the business. So we started today's meeting a little after 5 p.m. Eastern Standard Time on September 15th. That's when this is being recorded, right? We're broadcasting this live on YouTube at the moment. So we started this meeting a little bit earlier today, and we're ending the meeting a little bit later today. Right? That would be the formalized process, and you just document the time you started and the time you ended. And you go through this within the context of understanding, okay, I've now kept a record of what happened during this process of really uncovering all of the stuff that I need to be keeping track of as a business owner, and then documenting and storing. Right? I'm going to go through that process. How do we document it? Well, the way we teach our community to do it is we simply utilize a Google Doc, right? And we take the notes that we may have handwritten, and we just put it into a Google Doc, then print out that document, sign it, scan it in. We have a compliance system that we use for the businesses that are part of our ecosystem, so they can scan it into an encrypted environment, digitally store it, so that it is stored compliantly, right? It's unalterable. It's in a form that is safeguarded from prying eyes from the public, right? It's an encrypted ecosystem, but is easily accessible if it's ever needed, right? If it's ever needed in the process of dealing with a litigation event, right? It's easily downloadable, regardless of where from. Well, you could be traveling and still be able to get access to your company minutes, if you will. You don't have to wait until you get back to a particular location to get access to a physical copy, or worry that physical copy gets corrupted in some way. Maybe it gets wet or gets damaged or worse yet gets lost, right? And then you're trying to recreate that well after the fact. Now, again, let me know in the comment section whether or not this is something you guys have done. I cannot tell you the number of times business owners specifically, said to me, Edward, I'll just create it after the fact. Well, that's nice, and maybe you can get that to fly in some circumstances. But if you're actually in a litigation event and what you have isn't time stamped in some way, that it actually happened contemporaneous with regard to the particular year that we're talking about, well, that could be something that a court would look at as you not being completely forthright, dishonest in some way. And I can tell you this, if a court sees that you're being dishonest or believes that you're being dishonest, they are going to scrutinize things to a level that you probably will not like. It is much easier to document this well in advance. And that documentation process is not all that complicated, right? It does not have to be something that is absolutely ridiculous when it comes to documentation. I have a template. And again, I'm going to share this with you. If you stick around to the end, I'm going to drop a link where you can get access to it. If it is something, or actually if it's not available immediately during this live, it will be put into the show notes when this live gets published publicly. This way you can just click on it. So if you're watching this after the fact, and you're watching the replay of this, the recording of it, if you look down in the show notes, you'll be able to click on the link and get access to this document. But the document itself is a Google Doc. And it looks, let me try to make it so that it looks a little bit easier. I'll put myself off to the side. The document itself is pretty straightforward. From a template standpoint, I'm going to make this a little larger so that it's easier for you guys to see. But it's simply a document you can go in and edit yourself, right? And you can put your company name, right? What type of entity are you? ABC LLC or ABC Inc. or ABC Partnership, right? Whatever it is. Then you're going to keep track of when this meeting took place. What was the date of the meeting, right? What was the date of the meeting, right? What was the date of the meeting? What was the time that the meeting started, right? What was the location of the meeting? Was it a physical meeting in person, or was it done virtually? Was it a Zoom event, right? You acknowledge that in the minutes of the meeting. This way, again, you are documenting how this particular meeting took place. You're going to have a call to order section, right? Where you're going to stipulate that the company was called to order, meaning this meeting of the company was called to order at such and such time by such and such person, meaning who and what title. Was it the president of the company? Was it the secretary of the company that called it to order? Was it a managing member that called it to order? What I would suggest highly is that you do not talk about yourself in the context of owner, right? If your operating agreement or your bylaws does not contemplate different types of titles like officer, chairperson, member, a managing member, this concept of something other than owner, if that's not contemplated within your operating agreement or bylaws, that should be something you fix, right? Because I don't want you documenting something where you're potentially going to have an item that gets shared with the public, because sometimes there are certain circumstances where your minutes would be shared with the public. I wouldn't want you to be referring to yourself as the owner, right? Not in this context. We're going to try to continue this training of getting you into the habit of creating shields of anonymity with regard to what it is that you own. And one of those shields of anonymity is simply giving yourself a title that is different than owner, but it's formalized within your operating agreement or bylaws that you're allowed to do this. Again, an officer type of role, a director type of role, a board type of role, like chairperson as an example, managing member, right? Like these are titles that are different than owner, but again, if it's permitted within your operating agreement or your bylaws, that is the preferred methodology by which you push yourself out to the world, right? Not as owner, but as an officer, director, etc., right? We also then need to go through that verification of notice and quorum, right? Was proper notice given or was it not given, right? Right? Now, you may say, well, Edward, what if I didn't give notice? And let's say my operating agreement says I have to give 2 weeks notice before a company meeting. What if I needed to have a company meeting, but I didn't have that notice period? Well, you can create sort of a waiver, right, that you can sign and simply add to the minutes as an exhibit, right? It could be a waiver of notice, right? Even if your operating agreement says you need 2 weeks notice or 1 week notice or 10 days notice or 30 days notice, whatever it is, you can have a separate document that gets signed by all of those absent and or present, basically stipulating a waiver of notice requirement where, yes, they acknowledge that notice was required. They're willing to waive that notice. And they could do this after the fact. They don't have to do it beforehand. They could do it at the meeting. They can sign a document that you pre-print and have ready if you do have third parties. If it's just yourself, you could sign the document yourself at the company meeting itself. Quorum. Was quorum reached? Was it not reached? Again, that is the percentage of people that are required, percentage of owners specifically, that are required to vote on behalf of the company, to vote on issues of the company. And quorum must be met in order for a company meeting to have official outcome, right? Who was present at the meeting? Now, you could also list people who are not officers or owners. Maybe it's a board of advisor member that you have. That's an unpaid board of advisor. Maybe, let's say, your spouse. Let's say your kids, let's say your parents or your in-laws, right? If you're naming them as an advisor to your company and they're present during those meetings, hint, some times of the year that you just all happen to be together, maybe around the holiday times. But again, you're formalizing an actual meeting that actually took place and that things actually were addressed, right? I'm not talking about just fictitious creation of a document here. I'm talking about something that you're documenting, something that actually took place. Who should have been there but was absent, not present, right? You're going to document that. You're then going to address that prior minutes ecosystem, right? You're going to say, okay, there was minutes of the prior meeting. At this meeting now, we're acknowledging that those minutes were reviewed by us. We've received them. We agree with the notes that were taken, right? And we approve them as presented, or we approve them with amendments, meaning we have to make a change, right? You can go through that process. If there were any reports that were delivered during the meeting, again, you could stipulate that. Were there financial reports, right? Was it a summary of financial statements as an example? What was the reporting period that those reports were created for? Was it most P&L to date type of ecosystem? Was it last month? Was it last quarter? Was it year to date last month? Like all of those things, you just create that and you report upon it based on the actual reporting period. Was there an operational review document, like key milestones being met by the company? Any challenges, any progress statements? Like, did you have a COO that presented a presentation at the company meeting, right? You want to just document what reports were officially delivered during the meeting so that you can acknowledge that that was something that was actually discussed. You're formalizing these business operations that you're engaged in. Tax compliance review. Again, reviewing prior filed tax documents, right? Tax strategies that may have been implemented. Regulatory updates, compliance statuses, right? All of these things are methodologies that need to be documented. And the best way to do that is in a formal report that gets delivered through that company meeting, right? Any other reports, maybe key points of information that were shared by other members, if you will, right? Key points of information that were shared. Then you're going to move into that old business category, right? What was already discussed in a prior meeting that did not get finalized and that is carrying forward to this meeting. Maybe you needed to gather more information between following that prior meeting. Maybe that information was gathered, but you're going to address it here. Now, even if you're not ready to make a decision, you're going to bring it up here, right? Because it's unfinished business. It's old business that is unfinished. So you're going to bring it up. Even if you have to continue to carry it forward, you're going to bring it up. Because this is how you document that you're not letting things slip through the cracks, right? You're engaging in formalities of business. Now, you and I both know that maybe you have another system to ensure that those policies, those task items are not going to slip through the cracks. Like maybe you have like something like an Asana, right? Project management system. And the technology is going to be there to make sure that that doesn't slip through the cracks. Your process of going through litigation, a judge is not necessarily going to be looking at your Asana project board, right? But they may look at the minutes of your meeting. And if you are carrying forward things that have not yet been finalized, even if you're not going to finalize them in this present meeting, you're formalizing that you take this seriously and you're going to carry it forward in this particular meeting. And you're just going to adjourn it for a future meeting, right? Maybe more data needs to be compiled, more information needs to be researched, whatever it may be. More strategic partners need to be sourced, maybe new vendors, et cetera. But you're taking that old business, you're addressing it in this meeting, either at length or in brief form, and maybe you're carrying it forward or you're resolving it in this particular meeting. Then you move into new business, things that have not yet been discussed and that you're addressing in this particular meeting, right? Resolutions are formal actions steps that the company is going to take in a particular strategic area. Maybe it's a resolution with regard to opening new bank accounts. You're going to switch from bank A to bank B, or you're going to investigate new banks, right? You're formally resolving to investigate new banking relationships. You're formally resolving to investigate new payment processors, as an example. You're formally resolving that you're going to engage in a new headhunter to find strategic team players, if you will, for your company, right? These are resolutions that you're going to talk about during the meeting. You're going to resolve to act on them, and you're going to formalize it with a supplemental document that third party may need you to have. Like, for instance, if you go open up a bank account, many financial institutions are going to ask for a formal document acknowledging that you are authorized to do so on behalf of the company, right? So a resolution is that document that stipulates that, right? You're going to go through an election process, right? If it's the appropriate time to do that, maybe you're electing a president or a director or a manager, right? A manager for the company, maybe a vice president, maybe a secretary, maybe a treasurer. Now, you can be all of those. Or you could, if you're just a solopreneur, solo business owner, like a single member LLC, what typically happens in that context is you're just going to elect yourself as president. And in most regards, a president title is sort of quasi acknowledged as having authority on behalf of the company, right? Most third party is going to say, oh, this person's president. They are authorized to engage in business on behalf of the company. So that's the objective that we're looking for. Any other strategic directives? We talked about this before. There are capital allocation priorities that you're going to set. Are there risk management insurance directives that you're going to stipulate to the company, right? Are you going to have your team investigate new providers of property and liability insurance, right? So these would be directives, things that you're engaging in internally on behalf of the company. Not necessarily going to need third-party understanding of authority to engage or act. This is something, maybe it's a project that you're going to put team members on in order to get that particular outcome. Any compliance affirmations, right? For instance, acknowledging that the company has maintained all of the required licenses, filings that it needs to engage in, regulatory registrations, right, for the different types of businesses that are out there, right? If you are a medical provider, right, like let's say you're a dentist, like, are you compliant? Have you maintained your licensure, right? You're going to acknowledge those sorts of things. If you are a med spa and your particular municipality requires you to have certain type of not only state licensing, but maybe local business licenses, right? You're going to acknowledge these sorts of things here in this compliance affirmation section of the meeting. You're going to go through this process of stipulating that you are in good standing within the state and all states in which you do business, right? You're going to acknowledge this. You're going to also stipulate that company records are updated and being maintained and that they are stored in the company records book. Like, for instance, you may make a statement that last meeting's minutes will be incorporated into the company book. And guys, just as a quick aside, let me know in the comments, how many of your have an actual company book where all of the records of the company are being maintained in one location? Right? Some people have that in digital form. We do that digitally for the clients that we serve. We have, a digital ecosystem with regard to storing important company-related documents. But I also often will sort of like encourage businesses to keep a physical company record book as well. This is something that is of value in many contexts. Now, you may be also saying, well, Edward, I don't have a place to keep it. Well, if you don't have a place to keep it, investigate having it digital, right? At the very least, have it somewhere. Again, within our ecosystem with those businesses and high-income earners that we serve, we have a lot of these systems already built out. Now, again, because you've invested some time with me on this particular session, I'm going to give you access to this template. Now, what you'll do in this process is you'll fill in when the company was adjourned, and then you execute the minutes, right? You have to sign them, right? You formalize that these were the official minutes. Who's signing it? Meaning it should be whoever is in the majority leadership position, like president of the company, chairperson of the company, managing member. And then if you do have a secretary, having the secretary second, if you will, a second signature on the document. But maybe your company doesn't have that, right? And that's perfectly fine. You don't have to have this section. But you have at least one person who is in a position of authority over your company. Again, I don't like the use of the title owner in this particular respect. I would much rather you use some sort of acknowledged authority person, whether that's an officer, like a president, vice president, et cetera, member, specifically a managing member, maybe a chairperson if there's a board position that's been assigned. I'd much prefer that because of the anonymity aspects of it, right? Keeping you a little bit further away from this context of ownership in any document that potentially could see the public exhibition of it, right? Whether likely in the form or context of a court proceeding, as an example. But that is the execution. Now, there are certain things that may happen during a meeting where there may need to be an exhibit, if you will, that's attached to the minutes. Like, for instance, things like the amended prior meeting minutes, financial statements that were reviewed during the meeting, any resolutions that were adopted, right? Strategic plan summaries, like if you're engaging in a long-term strategic plan for your company and you have different people, key performers, if you will, in the company that are reporting on that on a regular basis, having that plan summary, updated plan summary attached to that particular meeting minutes is critically important. So you attach them as actual exhibits of that particular document, that minute ecosystem. Now, again, this is a simple template. And you may say, well, Edward, I could just go on to like ChatGPT and do this myself. You could, but we've just spent some time together. I'm hoping that you took minutes during this particular meeting. Because this session that we had, I literally went through the key aspects of a formal company meeting. And I acknowledged the types of things that could come up in that particular company meeting that you would take minutes for. Minutes is just a fancy word for notes, guys. Like that's all this is just notes of the stuff that was discussed during a meeting. And we're formalizing that through this process. And I want to make it easy for you. That's why, again, in the show notes when this gets published to live, this will be an environment for you to be able to say, okay, let me go through this process of saying, how can I use something that's already ready-made? All I need to do is jump into it and make the slight changes that are necessary in order to make it up to date for me. I think that's what this template is all about. And in the link that you'll get, you'll be forced to make a copy of this. This way you can't jump in here and mess this up because this is a template that we use internally as well. But you'll be able to make a copy of it. And then you can adjust it however you see fit. Right? That's the whole purpose here. I want to make it like push button simple for you guys. Now, this is just one aspect of getting things dialed in, right? And we spent a little bit of time together. There's so many other things formalities of business, if you will, that business owners should be engaging in. Formalized strategy, like that should be something you're engaging in, specifically on the front of taxation, right? We talked about this a little bit at the opening of today's session. We talked about this concept of generational wealth being the measure of success in business. And there are 4 pillars to that: tax reduction, asset protection, wealth multiplication, and intentional legacy. The most critical one for individuals to begin with is this concept of tax reduction. It's so critical that, again, I mentioned it during the minutes, company minutes section, right? Like, this should be something you're engaging in on such a regular basis, because keeping more of every single dollar you make is the primary objective of most companies, right? You're looking to become profitable, and the key way to increase profit is simply keep more of the dollars you're already making, right? So many will edge towards this concept of just make more money. And that's nice, but if you still have a hole in your bucket, which is taxation, you're putting more money into a bucket that has holes. It just means more leakage happening, right? And plugging the money leaks is critically important. That's why I want to make sure that you understand that there are opportunities that I make available for those that are part of my ecosystem to learn. And one such opportunity is coming up. It's a workshop, specifically a real wealth by design workshop, specifically on tax reduction. So it's a real wealth by design workshop on tax reduction. If you're interested, my team will put drop the link in the chat. They'll make sure it gets pushed into the show notes as well. This way, if you're interested in attending that, it'll be an opportunity for you to learn what we actually do to help business owners out there keep more of every single dollar they make. High income earners, keep more of every dollar they make. Real estate investors, keep more of every dollar they make. Because tax reduction is that first pillar. Keeping more of every dollar you make is the first pillar in creating generational wealth. Then we get into things like asset protection, which is one of the aspects of what we talked about today. The formal company meeting, if you will, the annual meeting specifically. And then once you're keeping more of every dollar and you're protecting those dollars, how do we multiply those dollars? How do we put those dollars to work? That's pillar number 3. And then eventually, how do we ensure that you have the ultimate say on who gets what you have, right? Like legacy by intention, right? Go through that process. And it all starts with getting information regarding how to hold on to more of every dollar. So my team in the chat will post, if you will, or drop the link. This way you have access to it if you want to register. It is a private event. During that particular session, we're going to be talking about essentially the real wealth by design blueprint. It's the blueprint that my private clients, the individuals who are investing $100,000 per year with me to have me help them implement strategy and structure, right? I'm going to be showcasing what we do, right? So that you can learn. Now, not everyone can work with me one-on-one. That's just the reality of it. But I want to elevate financial literacy out there. So at the very least, you can learn what the blueprint looks like. So show up with intention so that you can get outcome. And what showing up with intention means is you actually show up on time, show up with the capability of being able to take notes during that particular meeting. You get to write down your questions so that we can answer those questions, right? Jump into your ability to say, okay, what are my strategic action steps? It's called a workshop on purpose because I want you to understand that if you're going to show up, you show up to ready to take action, right? To get to work. So be sure to register, lock in your spot, check the show notes if this is the recording of the event. If you're still live and my team has dropped it in the chat, be sure to register. It is coming up soon. It is a workshop that will help you learn how to hold on to more of every dollar you make. Again, that's the number one way to make more money is simply to keep more of what you're already making, right? And let's plug that money leak. Let's plug that money leak so that you get to hold it on to more of every dollar. And all you need to do is click that link, register. I can't wait to see you there. It's live. It's an exclusive event. We're going to cover a lot. So be ready to take a lot of notes. And then from those notes, be ready to take some action because action is the only thing which leads to outcome. I can't wait to see you there. Until then, be well. Bye. Bye for now.